mate.
Hello, bud.
Is this been moved? I thought it was in the other account.
Oh, no, don't tell me that.
Oh no, it's okay. It wasn't in there. I had a look. I was in the wrong place. But I thought I was using that one before
Oh,
all this
I
week
think
except
the
for
first
today.
day was that other one, and today or the next day onward, or the next Monday onward, it was this
Oh,
one.
I see. I see.
Don't quote
So
me.
we've integrated over here now.
We have. Oh,
This is where we stay.
yeah, we have. This is home.
Okay, brilliant. Um,
How you doing?
yeah, pretty good, mate. Pretty good. Yeah. Market's looking ever more interesting, I think. So quite I think quite a few things to talk about. Definitely seen some
Oh, I've got plenty to
significant
talk
vol.
about.
What's that, buddy?
I've got plenty to talk about.
Oh, brilliant. That's all we need.
By way of explanation, more than anything, I'm a
Yeah.
bit Chris Isaac again.
What's that?
Feel like crying.
Oh, really? Oh no. Oh, okay.
Well, there's no damage, but oh my goodness, just just not in front of the charts at the right time, I suppose,
Yeah.
is the way to
Well,
put it. The
yeah. I mean, things
timing's
things
way out at the moment.
the time is way out. Yeah. I mean, I suppose it's one of those things, isn't it, that that just does happen because there's so many opportunities. There are opportunities all over the place at the minute, so you're bound to miss some. But
Oh,
I think the main
look, the
thing is that
market's
there's
always
still,
been the same. Some sessions just are on fire and
yeah,
others are not. And generally, you'll find if, for instance, the Asia session is very lively, you'll find that the UK session is generally very quiet, and
yeah,
that just goes with the flow.
yeah. Well, I think we'll
And when
probably see that today.
when it all happens in when it all happens in the same week, and you've got positions that you want to take and you aren't able to take them. Oops, hang on. I think I've lost my microphone. And you aren't able to take them because you're not in front of the charts. That's when it becomes very frustrating.
Yeah,
And
I agree
just
with that.
quite a few things moved a long way this week, and I should be in a few of them, and I'm not. So par for the course, mate. That happens.
Part of the course. Well, let's should we do the pound trade?
Oh, that thing. Yeah, right. Okay. I haven't done that since Monday, have I? Right. Okay. Let's do that. Let me find the chart. Dollar Swissy. Yeah, that's one of them that I
Oh yeah,
wanted to
dollar
talk about.
Swissy. Yeah, yeah. I'm liking that one too.
Well, it's mate, the one that we traded yesterday, dollar CAD, that some may have got into a bit of strife on shoot. And I'll explain all of that a little bit later. Pound US dollar. Where the hell is that?
Good morning, all. By the way.
Yeah, howdy, guys. Pound US dollar. Come hither. Oh, wrong chart. That's why. Okay, let's go there and share the other screen. This screen is the one we want. Okay, what time is it? Oh, I better hurry up. Okay, so entry level for the short will be 132.76. And if my control panel would go away, be good. 132.76 will be the sell price. And the stop loss on that will be, it doesn't tell me the high of that bar, does it? Will be 133.04. I'll be interested to see how people manage these dollar CAD and Swissy trades last night, those who were in. TP1 we'll get to, but in the meantime, we will go with the long, and it will be a buy at 1, 2, 3. That's the one we want. So I've got to go here. Okay. Why won't that open up? Inputs. Okay, gotcha. Start bar is bar number 1. That will take us back to there. Okay. And the high is 1,333. 1 point, all the threes. That will be the entry for the long. And the stop loss will be underneath that bar, which is 1.3312. All right, 1.3312. Now let's work out our profits. Starting with the short, because that may be taken in. So we've got a risk of 28. So our first TP will be 14 pips, unless we have, actually first it'd be 8, actually, 1/3, not 1/2. Unless we have something to stop us in the middle. And really, there's only that level there, but it's okay. So what did I say? 32.76 is 24.28. So 1/3 of that's going to be 9. So that'll be our first take profit. And that level will be 132.67. Go away, go away. There we go. TP1, 132.67. And TP2 will be double the risk, which is 56 pips, bring us in at 132.20. So 1/3 off at both of those, TP1 and 2, and the rest we will let run. For the long, the risk is 21, so the TP is 7. TP1 is going to be 7 above, so 13340. And TP2 will be double the risk, which is, what did I say it was? 21, yes. So 42 will be 13375 for TP2. Okay, there you go.
Good stuff, mate.
If you want to follow that, remember it is in beta test mode. This is not something you want to be putting tons of money on. It is absolutely in trial period. Still, now I guess whilst we're with me, or have you got something urgent, mate?
No, nothing at all. FTSE's actually started pretty positively so far, and I suspect we're going to see the monthly and weekly pivot, but we can have a look at that in a moment. No rush.
Okay. My screen is very blurry. Is my screen blurry for you, Ash?
It's not on Zoom. No, it's okay.
I can see it fairly clearly on YouTube.
Yeah, I can read everything, and might be. Isn't there a setting that you can change, Sino, on YouTube to get a different definition?
Yeah, maybe there
Maybe
is
on
when
the
you're
low
doing
definition.
videos. I don't know about when you're watching something. I don't know. Probably is. Watch in HD. Yep.
Yeah,
Probably.
it looks all right to me from here.
Okie dokie, happy days. Let's talk about 2 trades that we took last night and how you guys managed them and how you should have managed them, because there are strict rules around it, the way I trade, and you need to know them if you don't know them, and some do, some don't, so I best share them. I know it's probably too late for some, but for others it should be okay. When we are trading on the H4 chart or longer, so daily, weekly, monthly, triennially, whatever, if they'll come up with that chart one day, I'm sure. You need to take 1/3 of the position off at TP1. 1/3 of the position off at TP2, and move your stops to entry at TP2. So you don't touch your stop loss at TP1. You move your stops to entry at TP2, and the rest we just trail and we micromanage in need. When we are trading on 30-minute or hourly charts, like we did yesterday on pound CAD, we take half of our position off at TP1. And if I give you a TP2, you take half of the half that's left, or you close the trade. If I call it target, you close the trade. If I call it TP2, you take half of the half. So you take a quarter of the original position off at TP2 and let the rest run. Or if I put target there, you take the lot off, okay? So what happened yesterday was just ridiculous. We got taken into pound CAD, which we traded on not the daily chart. That was something else completely, was it not? We traded this on the hourly, did we not? If I recall, or maybe even the 30-minute chart. That was the other day. Not pound CAD, US dollar CAD. Sorry, guys. I'll catch up. Wondering why that didn't make sense. US dollar CAD. So, and now look at the bloody thing go. Ridiculous. My original trade was a limit entry order, entering the market here long on dollar CAD with the stop loss under here. I cancelled that order and shouldn't have, obviously, but I then replaced the order above this bar here, which was on either a 1 hour or a 30-minute chart. I can't remember, but either one, it's the same. Let me see. They'll be the same candle anyway. Yeah, it looks like it was the hourly chart. So we get taken into the hourly chart. Our target for TP1 is 13095. Where did this candle go to on IFS? 1.30949, 0.1 of 1 pip before our TP1. And on on Fusion Markets, we got a TP1 without any trouble because it went to 1.30955. So we got TP1 by a good half a pip. But on IFS, we didn't get a TP1 by 0.1 of a pip. As soon as that happened, I moved my stops to entry. And the reason I do that is because I get the SH1Ts big time. And when I get the SH1Ts, I'm in no position to be managing trades. So I just move my stops to entry. And if it hits my stop loss, I don't give a toss. And that's exactly what I did here. I moved my stop to entry and got 0 out of the trade. Now, had you stayed in and got your TP1, depending on which broker you were trading with, you should have also got a break-even trade because you would have taken half off at TP1 and move your stops. I think it was 20 pips from memory, our TP1. 20 pips from entry, and the market would have come back and taken you out. End of story. That's what should have happened. I suspect what may have happened is some of you either A, didn't get TP1 and took a loss on the trade, or B, took a third off at TP1 and therefore took a smaller loss on the trade. I don't know if anybody who in the room actually took that, but just by way of explanation, that's exactly what should have happened. Should have been a break-even trade, no matter what, because if you miss TP1 by 0.1 of 1 pip, it's time just to close the trade. Well, you can close the trade, absolutely, or do as I did, move your stops to entry. And that's how I do it every single time. So just wanted to explain that because it's very, very difficult, to call these trades and then if you don't have any management criteria or idea about how I'm going to manage the trade, we're going to get different results. And that's not what we want. We want you to get the same results as we get. So that's what you need to do, guys. 30-minute and 1 hour charts, or even 15. Sometimes I've traded 15-minute charts, but it's very rare. Take half off at TP1, move your stops the same amount of pips that you took at TP1 from entry, therefore making it a free trade. And if you miss TP1 by a 15th, then you need to act on that, because, as I said, I get very cranky when that happens, especially when my other broker on the same trade is giving me what I asked for, which is excellent execution. And as far as I'm concerned, IFS does not give me excellent execution, but Fusion Markets does. And I have no IB with Fusion Markets and no affiliation with them at all. So I'm not saying that for my benefit. I'm saying that for your benefit. Righto. There we go. Between all of this, you made $2. Quite decent, cause what it does. Quite decent, cause what it does. You made $2. Don't get you, Shukri. Anyway, hopefully that's cleared it up. And from this point forward, you will now know exactly what to do on the smaller timeframes and, of course, on the bigger timeframes as well. All of that said, look what's happened now. We're exactly, and had I left this order in place, we would be in pretty good shape right now. We'd be at TP1 and looking for more on dollar CAD, yes. On dollar Swissy, we are just below entry. And this is hanging around for a long, long time. In fact, we gapped down this morning, but it looks to me like the monthly pivot has acted as resistance, as has the trade line. And for that reason, I'm going to stay in this and just see where we go. It is messy though now, I've got to say that. If we were to come back below the daily pivot, I might even close part of the position. There's not a whole lot of risk on the table anyway. It's only, what, 1/3%, so it's no big deal. I'll keep you posted on what I'm going to do with that, but at this point in time, I'm going to stay in and see how we go. The old dollar, what do we do? Whatever would we do without the dollar? We'll find out in a few years, I'm sure. So there you go, mate. That's catch up on where I'm up to. We've still got a few going. Euro pound still going. Pound Kiwi still going. CAD Swiss is still going. And there is one other. Oh, that's dollar Swiss. So I've still got 4 going at the moment.
Okay, mate, that sounds good. We'll have a look at the pound and the euro in a moment, actually. So just to kind of deal with the question in the room about the French 40 CAC that was posted by Dennis. So let's have a look. So this is the CAC right now, and I see where your question is coming from, because we are in a sell zone. There's g'day SF, how you doing, buddy? Sweet, Dennis, Sino, Alan. Who else is in there? Shukri, Emmanuel. How you all doing, guys? So this is the CAC, and yeah, I can see why you posed that question, because it is in a sell zone. Is there a chance for some weakness? There is. Will it be significant yet? I'm not too sure. I don't think we have enough in the way of signs and signals. It's not going to be just bullish, in my opinion. We've got a few things out now. This will hold it up. So there's a scalper's opportunity here if it touches that line again to push, to maybe sell this one off. But let's just have a look at what's probably got the potential to drive the market today. We got a slew of services PMI later on. French final services PMI. This would suggest. It would suggest that going through that level before we get that particular number would be unlikely. We've also got ISM non-manufacturing from the United States. Again, it would suggest that it would be unlikely to be able to push through the important level. And if it was to push through, then there's likely to be some pullback during this here. So there is an opportunity. There are no signals really that you can sell here, except for this 5-minute bar does suggest that there could be some downside. So if you want to take a quick hit, now you have to see what the range is. It's 20 to the upside. to come and test that. 24 to the downside. There's probably an even money start to a trade there. I mean, you could get in here, but you are risking that that we haven't quite finished the surge to the upside yet. So at least going in under the bar would suggest a potential breakdown. But I like the price point. I think that's a really, really good question. But we have to consider a couple of other things about the Kakaron specifically, and most notably, we have the French president Emmanuel Macron adding some stimulus into the French economy, and that may be enough just to put the Kakaron in a slightly different space to some of the others. I say it'd be very unlikely for it to get through this area, and it is in a sell zone. You can see there is some data due out. I'm not sure how far you're going to get is the problem. The risk to reward is the key here. Not is there a selling opportunity? Yes, there is. But it's not really a turnaround opportunity. It's not suggesting a turnaround here. It's just suggesting that you might be able to scalp something out of the market as this likely comes down and tests where it's come from on these shorter term time frames. Yeah, in actual fact, you're seeing it now. So there is a reaction here. Do you want a one-to-one and pay possibly more? Certainly not the worst trade in the world. So, I like it. I wouldn't. I'm not going to take it myself, and the reason I'm not going to take it is that it's a bit far away for me from the really big headline of the day, which is the ISM non-manufacturing. We might see some strength and then selling into the number later. And that does cause a bit of a problem. But, the slew of data that we've got out in the next hour does suggest that, it would be strange for it to continue to take off until the data points are settled. So I'd probably want to wait for the data points to be settled before making any decisions anyway. Now, the other thing is to say is the fact that Emmanuel Macron has committed to stimulus. Now, I can't find where I read that story. It is on Bloomberg somewhere. But if you go to Bloomberg, then you will see a story about Emmanuel Macron and the stimulus package that he's putting together. So there are reasons to believe that the Kakaron, even though the scalping opportunity is there, could actually end up being fairly strong for the day if that filters through. And what's really interesting, I think, is that the S&P 500 is probably a better opportunity to short. I mean, I'm not saying even right now, but again, with ISM due out, the American market is likely to react in a different way. And look, we are in a kind of shorting area up here. You'd be fighting the trend, but look at we're talking about day trading opportunities. I may well take this one. No, let's just see if there's the value there. There's not a lot of room. It's not quite a 2-to-1. I think I'd want that line touched actually. Might be a shade early, but I wouldn't mind getting the S&P here. 29,150. I wouldn't mind shorting the S&P. It may not come to that point. We're already seeing a little bit of weakness kick in here, and we're seeing it really right across the board as well. This is the NASDAQ. Is the NASDAQ a shorting opportunity? Yeah, the NASDAQ's already there. Let's just have a look where that could go to. Yeah, it's not got a lot of room either, is it? This is the DAX. Yeah, the DAX has probably got some room. That the pattern we're looking at may not be there. It might be there. So they all in a sell zone. The DAX may not be in its ultimate sell zone, however. So that could prove to be a little bit tricky. Kakaron in a sell zone. Euro Stoxx 50 also. in a sell zone as well. And really, when you're in a sell zone, the question is, are we going through, or are we reversing? Because if we're reversing, it's the best possible price.
Lovely ascending triangle there, but it does look very toppy as well.
Yes, it does. Yeah, this is the thing. There's a few different signals here. Now, the FTSE looks to me like grabbing hold of this weekly pivot. And again, there's probably a little scalp there to the upside on the FTSE, which doesn't suggest that the Kakaron should be shorted. Really, we want to see it right across the board if we're going to be shorting anything right now, because the trend to the upside has been so strong. And there's also, in some respects, a likelihood, and this is why I'd be a bit more comfortable with the S&P. I think there's a likelihood the baton could start to just change a little bit. Not for very long, but I wonder whether the baton gets passed over to Europe just for a little while we see the US to just take a bit of a breather. Hey, Foodie, how you doing, buddy?
Now, tell me this. Speaking of Foodie, tell me Custard and Foodie. You're not related, right?
Custard and Foodie. Is there somebody in the room called Custard?
Yeah.
Is there?
Morning, Custard. 1, 2, 3. This is more than a coincidence, right?
I don't know who Custard is.
I don't know who Custard is either.
Oh, there's Custard. Oh yeah, sorry. How you doing, mate? Oh, I thought you were quoting some sort of 1950s TV show there, Jeff. I was like, yeah.
Nope.
Gotcha. Yeah. So Custard and Foodie. Yeah. Well, maybe there is a bit of a link there. So FTSE looks like it's going to be grabbing this area here, which means that the buy area on the FTSE is probably around about the 59.70 level. Now, I'm not sure if it comes back there right now or not. We have just had a little. It might have just got close enough with 59.79 to the upside, and we are seeing that move happen. So the FTSE looks like a long actually, which puts the Kakaron and DAX really still in that territory. And as I say, I wonder whether we might just pass the baton a little bit into Europe as we progress through September, just for a little while. There's no guarantee about that, but there is a possibility that is to happen. Now, what was I going to say? Oh yeah. Now the other thing about this is that one of the reasons that any indice becomes better value than another, we've discussed this before, but one of the reasons that it becomes better value than any other is because of its currency. When the currency is weak, the indice tends to do better, and vice versa. Now, we are seeing a pickup in the dollar, and specifically against the euro. So when you're looking at these crosses here, look what happens. So the euro dollar is having a little bit of a relief actually early doors now, but it is pushing to the downside. What's the bigger picture on the euro dollar, and the bigger picture on the euro dollar is for weakness. It looks like the euro dollar may even also touch the weekly. Geez, look at those, mate. You must be interested in that. The stacking of the pivots there.
Absolutely.
That is a scream out short there, surely. When we see the pivots all stacked in a place, it's got to get through weekly, monthly, and daily. So if it was to come to,
I'd love to see him get up there. Yeah, be good.
Yeah, if that gets to that point, that is a screaming short there for the euro dollar. So that's something that everybody should really prepare for. That potential possibility happening. So looks like the euro later on in the day could start to go short. Now, if the euro goes short, the likelihood will be then that the likes of the Kakaron and the DAX will probably strengthen, which again really doesn't put look at that that's really starting to break through now. It really doesn't put the Kakaron in a particularly attractive area to start selling off. Much more likely to see this one strengthen rather than weaken. Sorry, buddy. The euro dollar level. The euro dollar level is 1.1812 currently, 1.1812. So the Kakaron would suggest, at this particular stage that there probably is some upside in the offing, and we are seeing it break through here. So where does the next interesting level come in? Well, it's probably here. Maybe the pattern starts to change shape a little bit. So at 52.32, which is another 100 pips higher, Kakaron looks like an interesting potential sell. So really, we'd want to see the Kakaron continue to surge this morning into that US data point. And if it was to do that, then what we might then see is around about 2:30 when the US comes on market, the global equities do actually start to come down, and then we could be trading the Kakaron back to the level that would have been the original short there. So I'd quite like to see the Kakaron now. It's only poked its head through, so it could still be false, and it would have to hold above this area really for a good hour to have the probability that we're going at least one leg higher. Whether that one leg higher is to this particular point here, or even further to that high at 52.32 instead. So the Kakaron is actually quite interesting right now because of the zone it's in, and because of the stimulus that's also been banded around. US doesn't seem to be getting that stimulus through at the minute. There are reports that it's getting there, but there's still lots and lots of bumps in the road. So I think if we're looking for shorts, we can look at the US market, and it's a more dangerous play in some respects because it looks like this thing is just not coming back, but everything comes back, and all you need to do is check out what's going on with the dollar, and the dollar is continuing to strengthen. Now it isn't having that kind of day so far, that session I should say, that type of session so far today. But if the US dollar continues to strengthen, then the US equities will likely weaken, and then we're looking at things like gold, the euro as well. Look at the euro pound. Euro pound also suppressed down here, but which suggests maybe that there could be some further upside in the European indices. Now I want to bring in Forex Factory and see what the data points have provided, and what we see is Spanish services PMI coming in at 47.7, so pretty bleak there. We'll have a look at the IBEX in a little while. Italian services PMI not out just yet, but the French PMI is out at 10.2. We do need to look at, but let's have a look at the IBEX and see what happens with that one with such weak numbers. Again, this one should get a boost because of the euro. But if we're looking at shorting anything, that one already becomes a much better candidate because we're just not seeing the growth in their economy. Now let's have a look. It's at the weekly pivot right now. If it was still floating around the weekly pivot later on, maybe specifically when we got just before that ISM data, then the Spanish one at 71.52. Which is the E35. It's the IBEX, spelt with an I, but they've put an E next to this one instead. I'm not sure if they got confused. But the E35 would be a potential opportunity at 71.61 if we're looking at selling something. I would suggest the IBEX or IBEX, depends on how you pronounce it. I think it would be IBEX actually. Would be a better opportunity to look for right now. Now, when it comes down to the dollar, we've got to keep our eye on it because I have seen really, and Shukri, I'm sure, is all over this right now. What we are seeing is a weakening of some of the things that have been so strong against the dollar. Ethereum now down to 433. It's down another 1.5% so far this morning. And again, looking for a buying opportunity in Ethereum. Could be here. Let's have a look on the on TradingView to see what the chart is suggesting. But it could be here on Ethereum for our buying opportunity. Well, we got to be thinking about the dollar. Has it got any further to run? And we've also got to be thinking about the the VIX as well, because the VIX I am seeing pick up. So we are looking for some downside in some of these exchanges. But I think it might still be just a shade early. Where's my chart there? So look at the VIX. The VIX continues to pick up, and now it's managed to hold its breakthrough here through this lower edge, through this lower point here. A little bit weaker today so far, but the fact that it has held that upside stretch, it may well be grabbing now just a little bit more traction, which is suggesting that the volatility could well pick up, and that means that there are shorting opportunities probably coming. So still watching out for the VIX. A little bit weak right now, so the short opportunities aren't really on the table. We have got Ethereum. And it's not going to be an easy one to time. There's no doubt about it. But we need to do our best. It's currently at 434, and the reason I say it's a possible buying opportunity here is because of the support line that we've got along here. Now that's the 4-hour, but let's have a look on the daily. This is the support line right now. So if we're thinking about continuation patterns, that's just making a higher high. This could be an area for a higher low on Ethereum. So Ethereum, I don't really want to trade it just yet, but there is a buying opportunity just in accordance to where we are. We are in a buy zone, and it looks like it's just having a little bit of a turnaround just right now. So if the dollar was to weaken from this point, Ethereum looks like a pretty good candidate. Bitcoin also fell quite significantly yesterday from its lofty level, and Bitcoin is a slightly different picture, because with Bitcoin what we are seeing is a head and shoulders pattern playing out, and we are at the neckline. So not sure whether the head and shoulders ultimately works out here, but this is what we have with Bitcoin. Let me just blow this up a little bit to make it easier to see. This is what we have with Bitcoin, which is putting in a reversal pattern. Now, whether it reverses or not is always the real challenge. But that's what we got with Bitcoin. So we got the reversal pattern of the head and shoulders going on here, with a neckline likely along there. That's probably the neckline. We're just living just below the neckline right now. But what we'd want to see, if we're going to be trading this to the downside, we want to see a genuine break and close down here today, and then the pullback, and then we want to start to look for Bitcoin to come down. So looks like the dollar, would need to probably extend its legs for a good week or two, for us to really have some opportunities in some of this stuff, and it might be throughout the whole of September that we just see volatility pick up. We might actually finally get into a range with some of these as well, but Bitcoin looks to me like a potential buying opportunity if it was to fall down to around about 10,250. I think Bitcoin would start to look a lot more attractive, and it looks to me like it may well happen. Now, whether you want to short that market is a question for yourself, really. But it looks to me like Bitcoin is under pressure, along with some of these global equities. There is a trend line down there as well that we need to be aware of. This is the overall trend line in Bitcoin, which has started in March. So it is a primary trend line. Actually, no, it's not a primary trend line. It is an intermediate trend line, and it's an intermediate trend line because it's lasting from weeks to months. The primary trend line would last from days to weeks. So that's an intermediate trend line right there. Not as powerful as the primary, which is the one that we're always really looking for, but it could turn into a primary if that was to last from a few months to a year. Then that trend line would be in existence. But that also brings us down just a little bit further, maybe not quite as far as 10,250, but I wouldn't mind seeing it down to at least 10,250, maybe 10,500 I could be convinced of over here. But a bit of drifting down, at least to tuck into the trend line to get us started on analysing this again for some upside would be sensible. And really, what we're seeing there is just a general picture of what is going on with the dollar, and the dollar is strengthening. It's got to get through this pattern. And what's the trend line on the dollar? There's an intermediate trend line here on the dollar. The dollar's primary trend line actually is up, but there's an intermediate trend line there. So watch this on the DXY. Can the DXY get up to around about the 95 handle? Because if it does, that may well be the time to be getting back into things like Bitcoin and Ethereum and silver and gold.
Supposed to do that last week and didn't. Maybe we're on delay, yeah.
Oh yeah, mate. Well, I mean, the thing is, we've got some pretty important data this week. I think next week, when things settle down on the data front, it's probably more likely to have a move. But data is there's some really key stuff. There's some key things going on this week. So could we get the dollar to push into this particular area this week? Probably. I think it's got a good chance of continuing its upside. It's pausing now, but I wouldn't be surprised at all by the end of the day to see the dollar bashing its head up here, and then taking us up to the next level, maybe next week or the week after. So I'm going to watch out for that. But weakness in the dollar right now would suggest to me that there could still be an opportunity to trade this dollar Swissy, which I'd really like, actually. The dollar Swissy would probably be my favorite one of choice. I'd like it down at the monthly pivot, but some pretty decent support here last night keeps it 10 pips away from that particular level. So I don't know whether I'd get in here or not, because then the problem is the stops. 18 down. Well, actually, it might not be too bad. Yeah, I mean, if there was an entry here, let's just check this.
We're already in, of course.
Oh, you in, are you?
Yeah. Got in yesterday.
Oh, even better than that, mate. All right, well, in that case. Yeah, that looks like a pretty good price point. I might put an order in this one. I do like this. You know what? I think this one is a buying opportunity here. I'm going to have to work out my percentages, and I won't bore everybody with doing that. But I quite like this one. So if everybody's in, then I wouldn't suggest entering again. But if you are interested,
wouldn't be too many in this show that are, because that was in the US session. I think we traded this.
Okay, cool. All right. Well, the entry for me is going to be 0.91. 0.13, and the stop loss is going to be 0.90840, and I'd probably want to take profit there. Let me draw that properly. Probably want to take profit there. that will be a TP1, because there's a chance the dollar strengthens for them, to that next particular price point. So the take profit level will be 0.9153. So actually, I'll get rid of these. I'll get rid of these last numbers, because you don't need them. So that will be the trade for me. And I will just when you're looking at something, mate, I'll just ferret away and figure out how much it's gonna how much I need to put on, because I have to do it in a really archaic way. I don't have trade managers and things like that. So I'm going to have to go and do the calculations and then figure out how much I'm going to put on. But that will be my they will be my levels right there. That's what I will do. You know, I'll have a fairly tight stop on it, because I think there's a couple of levels it would need to get through. So yeah, I will put that on in a little while. But they will be the levels.
Happy days. Lord give it strength.
Yes, FTSE continues just to struggle a little bit to get up to that pivot there, but it looks like it is going to get there. We got just checking across the board some of these barometers here. We got around about looking like 64% of stocks in the UK in positive territory. If we were to flip to the DAX, we have got 26 of 30. Can't work out the percentage of that. Easier with the FTSE because it's only 100. So 26 of 30 of stocks are in positive territory on the DAX. And
about 88%.
88% there. And we got another one here. Geez, well, the CAC is definitely the outperformer right now. 39 of 40 stocks are currently in positive territory. So we're looking at about, 95% there, mate?
Sorry, I didn't hear the numbers.
39 of 40.
Oh, yeah, that's 2.5 times 39 would be 78, and 19 would be 97%.
97% of stocks in positive territory on the CAC. And the two that are, in fact, one's just slipped into negative, but one is a third of 1% to the downside, Veolia Environment, and one is a less than a tenth of 1% now to the downside, which is probably going to pop back into positive territory. So we might actually see all of the French stocks posting positive very, very shortly. Airbus, actually, the outperformer. In France, up 2.5%. So looks like some positivity when it comes down to some of that air travel that is going on. And actually, in the FTSE 350, we are actually seeing EasyJet up 3.8%, and National Express Group as well, which is an interesting stock that I've been watching, which is a coach company in the UK, up 6%. So it looks like the drive to the upside currently in stocks is probably vaccine related. You'd have to sort of garner from that, mate. It looks like some vaccine related positivity is probably filtering through, because seeing those travel stocks coming through, it's the travel sector that needs more than any to get some sort of vaccine or broad testing. That can get those businesses back on track. So
talking about travel and in particularly freight, lost a ship.
You lost a ship?
I didn't. I'm not sure who owns it actually, but it's been lost off the Japanese coast, as I understand it. Well, it must have gone down in that type. Well, there's typhoons going through the area. And I think it was a livestock freighter out of New Zealand. Gone.
Oh, really?
Not good.
That is not good. That isn't good. Right. So just have a look back in the room. Ash, why stock green but VIX up? Oh, because the VIX, Alan, we'll talk about that in a moment, actually. Traders have two strategies if you're holding Ethereum now. On Bitcoin, they typically do. Remember, the CME gap is 9,600. What's the bottom trend line? Well, I'll have a look at that as well. Alan, so the VIX won't tell you whether the market's going up or down. It just tells you that there's volatility in the market. So this is one of the mistakes that traders can make about the VIX. They think the VIX is going up, so it means that the stocks are going down, but that's not what it means at all. It just means that volatility will pick up and potentially opportunity picks up, because if people have got a buy the dip strategy, they need really some volatility and the VIX to kind of provide that volatility. Certainly to provide the intimated volatility to pick up stocks when they come down a bit. So it just means that we're probably going to have a few dumps on the way up. So we are still going up, and we shouldn't doubt the upside until it actually has reversed. So the VIX isn't going to tell us the stock market is going to reverse. It's just going to tell us there'll be probably opportunities for those buyers to get into get into it. And it's going to be kind of hairy. So if you are a bear, don't be trusting the VIX, pop to the upside. But if you're a bull, you can look at the VIX and go, day trading opportunities are in play. Now, you can trade it like short first, but be prepared that you should really be still until the trend changes, shorting to go long. That should be the strategy. It's a really good strategy anyway, but when the VIX is picking up, it's an even better strategy. It does mean that you've got to pick the high, but short to go long is a really good strategy, because what will likely happen when you see the VIX increase is that and unless it's just a crazy bounce that we saw during the COVID pandemic when the VIX just went AWOL, and we saw the stock market crash, then what the VIX is going to suggest is that that if there is some really big dips down here, people are going to be buying it up. So you're likely to get that money nice and quickly, rather than seeing a grind to the upside. But we're likely to see bounce and go, bounce and go. But it might get caught in a bit of a range. So the idea of a strategy here would be to try and sell and buy. As it comes down, you buy. As it goes up, you close and sell. And see if there's a bit of a range. Now, at some point, it's going to break, but it does suggest that we could get a little bit more rangy. But we're at the top end of the range, so the likelihood that this comes down to test a lower leg is increasing with the VIX volatility, picking up. Yeah, every day is up right now. Yes, it is, and an astonishing move, really, with the stock market, and certainly unprecedented. Unprecedented historic moves, really, ever since it all started. Those drops that we saw in the during February were unprecedented, and I would suggest that some of the moves to the upside in some of these markets has also been pretty unprecedented as well. The best August in 3 decades has just happened for the S&P. So I don't think the lack of interesting headlines about the market is going to change, and I don't think there's too much of a crazy theory to say that it all started when Donald Trump came into power. I'm not saying he caused COVID, but ever since he's been in power, the market has just been hyper volatile, really.
Well, we'll have a look, won't we, at the possible correlations with such things. Was it last week? I can't quite remember. Put a time frame on it.
Yeah.
But we're not seeing anything terribly different, apart from the fact that we've got the virus. But if you cast your mind back 4 years, when the entire planet and the entire commentary world, and there'll be people who put their hands up and say, I knew he was going to win, but they gave him no chance of winning the election. He was starting to gain a little bit of traction probably around about this period, a couple of months out. But prior to that, he was, like 100 to 1. Well, not 100 to 1. But I remember we were talking to Cliffy, who used to do our betting odds on the outcomes of big announcements, and it was something like 7 to 1 or 6 or 7 to 1 to win. Right. And we pontificated that, wow, that's a pretty good price in a 2-horse race. You don't see that too often.
Yeah.
And that's as far as I'll go with saying I thought he could win. But there'll be plenty who put their hands up after the event and say, I knew that was going to happen. But the reality is he was given very little chance until very close to the election. And I'm seeing very, very similar things right now. And I'm wondering if that's reflected in the markets. And if you go back, and when did we speak about this? I can't remember. If you go back and have a look at possible correlations with all things leading up to an election, I don't think you're going to find that things are terribly different than they were this time 4 years ago. Yeah,
I think you're right, mate. I think you're right. It was a pretty interesting study we did there. It's a services PMI from Spain we've covered at 47.7, so a shrinking in Purchase Managers Index there. The Italian economy also looks like it's just not getting anywhere at all. Previous of 51.6, so actually looked like there was some growth there, and now just shrinking again. French services PMI come in at 51.5, so expansion because it's above the 50% mine, but just a bit weaker than expected and weaker than previous. And we'll be getting the German PMIs in around about 5 minutes, so we can check those out. But certainly the data points so far don't look particularly good from the Eurozone and the Euro bloc. Now that doesn't mean the market's going down. It just means that if you are looking at certain stocks in France, then maybe they're about to change, and I'll have a look at that in a moment. The bottom price for this, the lower trend line, was on the 12th of March, and it's around about 4,000 Shukri. If that's what you were talking about, the lower price of Bitcoin, it was at 4,000 on the 12th of March. That's where I've drawn it from. If it's not that trend line, let me know, mate, and I'll find out what trend line we're talking about. I'll bring up the chart again. The Kakaron currently down now with 35 out of 40 to the upside. So we've had a little bit of a shift since those Purchasing Managers numbers have come out. Bit of a mix of stocks as well within those. Nothing hugely of massive correlation or of interest. It's not really telling me a lot, but it is just saying that that some of those numbers have just come off just a shade. And Renault now has taken the hot seat. So a car company. Actually, the car companies over in Spain today doing very, very well. Renault up 3.5% pretty much. Peugeot also up 2%. So and we just talked about Airbus before, up 2.8%. So still looks to me like the travel sector is potentially going to have a pretty good day today, by the looks of what I'm seeing right now, mate. Looking into the FTSE 100, same thing. With the second best performing stock is International Consolidated Airlines, up 4.5%. So and actually the car companies are also in the UK doing pretty well. Rolls-Royce currently up 4.5%, and that really puts travel and well, I mean, they're aerospace and defense, Rolls-Royce, but I suspect they might be getting a bit of a kick because of what's going on with their automotive instead. Now that may well put Germany.
Rolls-Royce and Boeing are pretty closely tied together. They use their engines, do they not, Boeing? Or
yes, they do. Yes, they do. Yeah.
Right, and they've had issues, have they not, with one of their planes? I can't remember what one. Only a couple of weeks ago, only a few weeks ago. So maybe that dropped off very quickly. You're saying that's now rallying again. Was there a big spike?
Well, Rolls-Royce, I wouldn't really call it a rally. It's just, it might be a relief move than more than anything else. But Rolls-Royce are one of the only companies in the UK which didn't close down for COVID, and actually didn't fire anybody either. So
but did they spike down only recently, like last few weeks?
Did they what? Sorry.
Did they spike down only recently in the last few
gosh, no. The Rolls-Royce have been on a bit of a bad run for quite some time. They back in. Let me just check this out. Back in. There we are. Back at the start of February, just before the kind of COVID thing happened, their stock value was £7.
Have you got a chart there? I can't see.
I can show you a chart, mate. Yeah.
Yeah, I'd like to.
I'll show you on TradingView. Hopefully they've got it here. There we go. Rolls-Royce. Look at this on a daily. It's been in the mire for quite some time. Ever since 2018, this one's just been falling and falling and falling. But just before COVID, it was up at £7 a share, and now it's down to £2.29. So not in great shape. You may be brave to trade trade this one, but you can see there's a fairly solid horizontal level here. So anybody that likes, and it's a big drop as well. It shouldn't be down here if we are just thinking of COVID prices alone. What happened before COVID? Yes, it was on its way down before in 2019, but realistically, it probably should have stopped at the neckline of the right shoulder. It probably should have stopped here. Actually, talking of a shoulder and a head and shoulders. Question with this one: has it had its run? And actually, there's patterns within patterns here, so it's not going to be the easiest thing to do a measured move on. Let's draw the primary trend line there. Yeah, probably should have stopped here. And it had stopped there actually, but then COVID happened. It's down there. So even if it was able to come up and test its trend line, then that would actually signify a pretty solid move. So 190%. If you like Rolls-Royce, maybe getting back on track. And I've been saying this to my friends actually over the weekend. We were chatting about EasyJet, and I was saying to them that I think EasyJet would be a really good investment. And there's a chance that you could double your money within a year, which is just it just doesn't happen if you're trading, if you're making an investment, if you're to buy a house or generally buy stocks and put some sort of retirement plan in place. The likelihood that you get your investment back double in a year, just you'd be happy if it doubles up in 10 years. And buying most of these assets. Rolls-Royce as an example. If you were to buy Rolls-Royce back in May 2003 and got yourself to May 2013, then actually this is all of a sudden becomes really interesting for Rolls-Royce. Over 10 years, that went up 1,000%, which is pretty crazy actually. But I think that's what can happen if you pick up the lows when when a disaster hits, because you pick up Rolls-Royce at the lows in the global financial crisis and manage to trade that back to the highs. Can't quite see that now. You're looking at 300% in the space of 5 years. So I think that there's some opportunities to pick up the likes of EasyJet, and maybe looking at this Rolls-Royce chart as well. Maybe there's an opportunity to pick up the likes of Rolls-Royce back to a level and actually double your money. And looks like with Rolls-Royce, maybe even beyond. In the next year, or even if it comes back in the next 5. So I was saying to him about EasyJet, and I think looking at this, it's the same thing. If we have belief in the brand of Rolls-Royce, and we know that really, before a pandemic hit, it was coming down, but probably around about to consolidate here before maybe falling for a different reason. Who knows? But I think that may well be a decent value there. And if COVID is going to pass and we get back to some sort of normality, Rolls-Royce might be a candidate for some longer term investments opportunity. Not sure I'd want to trade it, but I think for a longer term speculation play, Rolls-Royce looks pretty good. And I think you could probably pick up a basket of them, actually, mate. I think EasyJet would be a play. Maybe National Express would be a play. Rolls-Royce would be a play. You could just come down right down the bottom and go, you know what, I'm going to pick up some of these values. One of them is going to go up, and it'll probably make up for any that don't quite make it. So there might even be an opportunity still today to go and pick up some pretty good names in the next 10 years. I reckon there would be money to be made there.
Yeah, interesting what sectors are going down whilst the stock market's making all-time highs. Very interesting. Yeah. And that's probably a very good investigation process, I would have thought, for those people who are that way inclined, myself not included.
Yes, LT saying that Rolls-Royce just closed their Singapore operations. And this is Rolls-Royce retrained about 100 people in Singapore. Retrained, or rehired. Should that be it, Lewis? This is the car Rolls-Royce's aircraft engine. Yeah, I think the thing with it is that cutting back staff is that's the par of the course, isn't it? Right now, 52, doubling up to that point actually looks like the most sensible spot on Rolls-Royce. Doubling up the cutting back on staff and trying to save some money, I think, is the par of the course for many of these companies right now. But if we believe that Rolls-Royce is going to survive, and it does look like, that they sell quite a lot of cars in China, and that doesn't look to me like it's going to stop when things get back to some kind of normality. But the likes of Rolls-Royce need normality. The engine plant. Okay. Well, I mean, again, the airline stocks need to start going to the upside again, and we'll probably see Rolls-Royce, moving in a positive direction. So if travel does well, then Rolls-Royce should pick up. It really should pick up. But maybe things have changed significantly enough for Rolls-Royce to be decent value somewhere in this area, rather than starting to get right back to the highs again. Certainly, getting back to the highs of 2012 looks unlikely.
Got an order, mate.
You got an order. Fantastic.
Mm-hmm.
All right, let's flip to you.
Look, there's quite a few setups, but I'll pick this one, and I'll share it in the show, and we'll deal with the rest in the US. This will be a quickie, I should imagine. It is Aussie Kiwi on a 30-minute chart. We're trading it long. And I'll give you an entry level. Or will I? Trying. Come on. Play ball. There you go. 1.0840 will be the entry. $1.0840. Stop loss will be at 1.8023. And TP1, we will decide. TP1. What was our risk on that pip-wise? About 17 pips. There's really nothing in the way. We'll go with 1.0853 as our TP1. So bang on there. That's where you want to be taking your first take profit. Now, what did I say earlier, guys? It's a 30-minute trade, so we take half off at TP1, and we move our stops. Whatever we take at TP1, which will be chuck a pip and a half in for the spreads. You'll be taking about 12 pips of profit, so move your stop loss 12 pips from entry, which will bring you to around about there somewhere. Okay. And where do you get out? Good question. Yeah, I can't see anything too foreboding. Maybe there. That'll do. 1.0893, let's say, will be your exit point. 1.0893. So that's target, not TP2. That's target, and we'll see how that travels. Now, I'm pretty sure that Shukri would have gone out and put about 100 lots on limit entry orders short on the euro. I was actually going to trade it back to there, but it won't pull back. Damn. Maybe it will off this level. So what I'll be looking for here, I'll just share this one with you as well, is euro dollar long, but I want to see a pullback here. I'd like to see something like pullback off this level in particular. I don't want to see it get any higher, pull back here, maybe retest the little red line there, which is what? Can't remember what it is. Oh, yeah, it's a bit of a trend line on a 4-hour chart, I believe. Let me just check that. Yes. Okay, so I want to pull back to here. Well, this vicinity doesn't have to come back to that line and look to trade it to there. But once it gets to there, I'll definitely be looking for a lower high to trade this short. Now, there may be the instance where in 54 minutes, if this candle closes as is, or even if it shoots up to the pivots, which is what I've got in mind, I will look for shorts at that point. Now, I don't think I can trade that 84 pips. Maybe I could. Maybe I could. I'll call that in the US session anyway, but my thought process is that we will come back, or sorry, if we come back here, then we're going to here, and then potentially a lot further than that. But yeah, levels are pretty tough. Monthly pivot, I guess, is where the ultimate target would be. That's not hang on, where did I see that? Not this month's monthly pivot, that monthly pivot. Why am I seeing two different monthly pivots? That's crazy. It just hasn't gone up. I'll give you the level rather than tell you that. I just can't see it's gone up here. So 116.13, I reckon, is target area. If we can get into this, I think that'd be pretty good reward on the back of it. So long to get short, guys, is the key there. And I'm happy to trade it long, but I need to see that pullback. Once it gets up to here, then I'll look for the lower high on the 4-hour chart. So lower high here, and then look to trade it short. But if we don't get to here and this bar is bullish and decisive, it may well be worth putting an entry underneath there. Okay, that's it. I'm done, mate. There are quite a few, to be honest, that have set up, but I'll just share those with you and save a few for the US session as well.
Fantastic stuff, mate. Okay, sounds good. Yeah, I've got a few things to bring the guys as well in the US show later on. Some UK stocks I think could be quite interesting, maybe for a short as well. So we'll have a look at some of those and maybe a bit of a mixture, actually, bit of a long and short potential. So we'll have a look at some of those in the UK, in the US show as well, and we'll be back for 1:30 UK time for a little preview of that. And we will be watching during the US show. I think we'll be watching live the ISM non-manufacturing.
Oh yeah.
We'll mind some of that as well. So, okay, mate. Well, I'll see you in a few hours. Have a good break. And for the rest of you, have a good break as well. Thanks for joining us as always. We'll see most of you in the 1:30 session, some more of you in the US show, and we will see the rest of you on Monday at 5 to 8.
That's the date. Don't be late.